Okay, today is Friday. It's April 8th, and we're trading the New York session. So I'm going to walk you through the price action, some trading decisions from the start of the London session today. So this is something that we have been watching for the last few weeks. Let's go back over here to the 1 hour time frame. Sorry. So we're going to start off. I want to start you here looking at the 5 minute, but I just want to warn you that we're going to go back and forth between the 5 minute, the 30 minute, and the 1 hour. So right now I'm going to go to the 1 hour. The reason I'm doing that, I want to walk you through, in case you missed it, the support levels and some of the bars that we've been watching. So let me tighten this up. So the discussion this morning was support and resistance. Which support and resistance levels are important? Which ones should you be paying attention to? How can you determine when there's likely to be some sort of major reversal? So these are the different discussions. These are the different ideas that we've been talking about today. Actually, for the last couple of days since we've been watching it go lower and lower. This is the pound dollar again. This is the 1 hour time frame. So when you hear me say this quite a bit, and I'm going to repeat it as often as possible because I think it's a good way to think about what you should be thinking about and what you should be looking for. So sometimes people say, well, I don't know, what levels are important when I'm going to go to a 5 minute now. And when they see price moving around, and it's not important that you see where price is, but let's say you're looking at a level like this. Well, when you see this kind of behavior, even if you don't know what's to the right, when you see this kind of behavior like this over here, and you're trying to make a decision, you can still see that that's consolidation. Excluding this little spike right here, you can still see that this is consolidation. And you can see there's a support level, there's a resistance level. And if you start looking at things way too close and you're not looking at the bigger picture, you're not going up a few time frames, then you're likely to make a mistake. Not in every instance, but you could miss something because you can't see where the 1 hour, the 4 hour, the daily, the weekly, the monthly support and resistance levels are. You may be sitting right on one right here, and you may not even know it if you don't go up a time frame on the 5 minute. And then you may make a mistake as a result of not knowing where that is. The larger, more important support and resistance levels are. So this analogy that I always go back to, and you hear me say this all the time, if you and I were trading on the stock exchange floor, it's 1915, 1920, whatever. We don't have computers and we don't have our cell phone. At best, there's maybe a chalkboard, right, where they're updating numbers or whatever it is that they're using. Lights, whatever it looks like. We have order tickets and a pencil. And you know well that traders are going to remember last month's high and low, last week's high and low, yesterday's high and low. You know that they're going to remember that because when price approaches one of those one of those levels, there could be a reaction. It may bounce away from those levels. It may go sideways at those levels, or it may break through those levels. And we want to know that because there's likely to be a reaction that we can trade. So you hear me say this sometimes with the Tech One Trade videos. I say, if it's in the middle, let's say right where my cursor is, in the middle of this consolidation, I'm not going to trade it and pick a side and say, okay, well, it's got to go either to resistance or support. I'm not going to do that. I know it's likely to go resistance or support, but I've heard people say in my chat room, they'll say, well, let's just pick a side and take sides. Like they want to place a bet. They want to see where it's going to go. And I will always say, well, I'd rather wait until price hits resistance or hits support and then trade the reaction because you can see that's a much better opportunity, much better play. That's just the way you want to do it. You don't want to play inside of this range. To me, even though it's not, when I see price inside of the middle of consolidation, I think of it in terms of phase B. I don't want to trade in phase B. I don't want to trade in phase B. Now, if I'm looking obviously at phase B on a weekly or a daily time frame, but then I'm trading off of a 5 minute chart, it gives me a perfect setup, well, then that's different, right? But you get my point. I'm going to be thinking I do not want to trade in the middle of consolidation. I don't want to pick sides. I'd rather wait for price to go and approach resistance or support and then trade the reaction. You want to say that, you want to think that too. What's important? What's an important support or resistance level? Well, 5-minute chart, it's going to be difficult to say. Sometimes we can find it. We might find an ultra high range bar that might sort of set up the conditions for consolidation in some cases. But we want to go up a time frame. So from here, I'm going to go to a 1-hour chart. That was a 5-minute chart that we were just looking at. So now I'm going to go to the 1-hour chart. So here's the 1-hour chart. Now things look a little better. If I tighten up the chart again, you can see that right here, this is last month's low. This is March low. This is a 30-day low, approximately. This is last month's low. When we were stuck up here back on last week, March 29th, March 28th, it was above the March low. So the path of least resistance, excluding some of these dramatic bounces here that we did trade, we still had another level of support in here that we were trading off of, which was this one right here. That was on March 28th. There's videos on the YouTube channel about that. But again, it's likely to continue to just roll over until it finally hits a significant support or resistance, in this case, support, which is last month's low. This is March low. Now, at this point, once it does that, and it usually will go through it, sometimes it'll stop perfectly, sometimes it'll fall just a little bit short of it. You know what I mean? You kind of see these little differences, but you need to sit up and pay attention. You need to be aware of where's last month's low, where's last week's low, where's last week's high, where's last month's high, and then yesterday's high and low. If we're trading off of a 5-minute, I want to know where the 1 hour, the more significant ultra high range 1 hour bars are, and what the high and the low of is, where it is, what that high and low is of that 1 hour bar. So let me go back over here and show you what I'm talking about. So here is a 1 hour bar right here. This was with some news a couple days ago. It didn't really go anywhere. It just kind of went up and down, and it solidified this right here. This was 4 1 hour bars that created, and they're not too ultra high range. I mean, you can see the bodies, the range of these bars. And that's one of the key things that we in our trading system look for. We look for these ultra high range bars. We're going to go to the volume chart in just a moment with the Thinkorswim platform, and we're going to walk through all of these different bars that we're looking at and the volume and things like that. We look for, when we look at a chart, one of the first things we do when we are analyzing a chart, let's say this is where we turned on our computer. Let's say we didn't trade any of this, all right, but we just happened to turn on our computer and we're looking. We're going to identify ultra high range bars. Well, we have one here. It just happened in the last hour. So I'm going to draw a little resistance, a little support. And then I'm going to watch to see if price starts to fill out and move sideways within that range. Now, I would expect a little spike to the upside and a little spike to the downside. We get that. Up thrusts and springs. That's what we call them. We look for them. That's how we trade. We trade certain opportunities. That's not the only way, but that's one of the things that we look for to identify a choice trade opportunity or a confirmed reversal. So I'm going to continue to watch that. I'm going to draw a line here, out a little ways, and here. And again, on Monday, if price stays contained within this 1 hour bar into the close for Friday, well, number one, I don't want to have any open positions over the weekend. Number two, it may just travel inside of that range. So I want to be paying attention to that. And then Monday, I might get an opportunity if it breaks out of that range on a 5-minute chart. So let's look for another one. So here we see sort of a strong one. We would expect that if it's going to take out this support level. It finally blasted right through that support and moved down. I'm going to walk you through the setups here in just a moment. And then here's that ultra high range bar. So we've got a line or an imaginary line in here. And then we've got a line here and a line here. I sometimes will highlight them with these boxes. If you want to do that, you don't have it set up. It's right up here. Oh, you can't see it. It's right up there at the top. If I go to, let's say, with the Fibonacci tool and the drawing line tool, trend line, things like that, I'm going to right click on it. I'll show you how to do that. It's going to open up this box. I'm going to click on customize. And here is the customize box. And I already have the rectangle shaded right here. It's on my menu list up here at the top. But if it wasn't, it would be over here on the left. And then I would just highlight it, click insert, and it'll put it over here on the right hand side. And then I'll click close, and there it will be up there at the top. So that way you can use this little shading box. See that? you can use that to shade it. Now I set mine up in blue. You can also double click on it. And I sometimes, on some of my other charts, I'll click rectangle properties and then I'll just click something like gray, for example. So that's how you set that up. So let's move on. I'm going to go ahead and get rid of that. But here I'm going to identify key levels of support and resistance, or this overall range, right? So let's talk about the setups. We tighten up the charts. We traded a bounce last week here. We traded a bounce earlier this week here. That was it. Notice how none of these go any higher. There was also a little level of resistance in here. I've had that on my charts all week right here. We've got that little low right here. So when there was nothing over here to the right, I'm watching this little move right here, how it dips down. And this dotted red line where I have my cursor, let's tighten that up and see where that is. You can see, yeah, you can see it right over here. That was a key, sorry, let me go ahead and, right here, you can see the low, the bounce, and then the spring. That gave us a trade up here. Here is that low right here at about 1.3050, and there it is right there. So you can kind of see what it's doing here. Let's go back to where we were. So here's a support low. I draw that line right there. I don't know if it's going to drop any lower, but I notice that price goes through. This is a 1 hour chart, and the bars hold on this 1 hour time frame above that support low. That does not mean buy. That does not mean buy, because I'm still aware of, let's tighten up the charts again. Here it is right here where we were just talking about and analyzing. There's a little bounce right here. It doesn't necessarily mean buy right away. You got to be careful. And the reason that I say that is sometimes people will take this as a buy opportunity. They'll see this support level. Let's say they have their charts expanded like this. This is all the data that they can see. And this is what they're trading off of. And they're ignoring the monthly low, which is this blue band right here at the bottom. They're not paying attention. This is all the data that they can fit on their chart comfortably without distorting what they see. They want to see either candlestick patterns or the bars, and they're paying attention to the range and the close. So if that's what you're doing and you're not paying attention to the bigger time frame, you want to go up a time frame. Remember, if you're trading off of 1 hour, well, then you want to be aware of the daily. You always want to be aware of the daily high and low anyway. And then you want to be aware of the weekly high and low. They may not matter at the time that you're looking at the charts, but at some point they will, because they're going to approach those levels. You start going up higher time frames, they become more and more important, right? That you think about that, like a monthly high, a monthly low. That's going to be an important level, and then you can work your way down. So again, this doesn't necessarily mean buy right away. This little trade right here, and there's still a little low right here. Well, we know that sometimes it'll bounce off of a low like this, and it'll look like that. It doesn't always go too deeply through that support level and then reverse. Not like this one. This one just like blasted right through, but it doesn't surprise me that this one just recently blasted right through that major monthly support level, and it looked like this with an ultra high range bar. That's a lot of people remembering it or getting stopped out or trading it, knowing that it's last month's low. It's a critical level, so it wouldn't surprise me to see this kind of behavior within that bar. There's a signal, there's a story to be told here with the price action and what it did. And then notice where the close is. We always pay attention to where the bar closes. So again, with this bounce here and this move, then we start noticing that none of these highs are making any new highs. That's why this one was shaded in blue. Let's go ahead and open it up now. This one's shaded in blue. That's the high after that bounce. And then they start getting lower and lower and lower over time. So you're going to trade bounces off of support to the upside less and less and less. You're thinking, notice it, right? We draw our trend lines. So trend lines are important. Not everybody draws trend lines the way we do. So we're going to draw a trend line that looks like this. It's going to look ugly, but I'm just going to leave it there. And then notice that sense of urgency and how quick and how dramatic it was, right? They're still relatively small range bars, but they're still covering quite a distance. And then we get this move right here, and then we get this move right here. Notice the angle of the move, and notice how long it took to get up there. Do it again. and then do it again. You see what's happening here? Now you can start to see just exactly what's going on here. And now it makes sense. This is going to, you draw your lines like this, draw your trends like this, like leave them there. If that's what it's going to take to get you to pay attention, then this is what you have to do. This is what I had to do. I had to do anything that I could do to pay attention, to draw my eye to the clues that we look for, the range and the ease of movement within these bars, where the close is, how fast and dramatic was the move initially off of support, what time of day was that, and then start to notice, is this starting to fade out and is it losing momentum? Well, you can see it here with these angles and the distance and the range and the length of these moves. And then right here, here's your opportunity. The whole thing makes one more move, closes up at the highs, doesn't go any further, and rolls over. Here's your sell opportunity right here. Here's where we start looking for the sell. This is how we track the smart money plays. Everybody else is trying to trade inside of these ranges. They're not doing this. What they're doing is, because I used to do it, I know what they're doing. Now I just switched to a candlestick. So if we're thinking about this as support, well, there's a bullish engulfing candle right there. Back in 2001, I would have bought this. And I would have thought, okay, great. It's bouncing, it's bouncing, it's bouncing. There's 2 days gone by, or maybe a day and a half. It's got to do something. It seems like it's support. I know that it doesn't necessarily have to hit the major support level and then bounce. It could do that right here. It really could. But it's more likely, and it's a better trade opportunity, and things are in my favor. The odds are in my favor if I wait for this or if I watch this. But let's just say I'm not, right? Most traders aren't going any further. They're not studying the bars. They're not studying all of these details. It takes too much work to do that, right? That's why a lot of people don't do it. They just buy the candlesticks, books, and the patterns, and they trade off of the candlestick patterns and then stick an indicator down here at the bottom, and then maybe a moving average. And don't even get me started on the guys that trade off of the moving averages. Like, I can't stand that. It works for a while, and then all of a sudden inside of consolidation, they blow the whole thing up. These guys that trade off of moving averages. I watched just another moving average video, and he says, undeniable proof that my trading method works. And then he goes on to explain how all you got to do is just wait for it to move up and then buy when it touches the moving average, or sell, and then do it again and then do it again. And he just cherry picks all these opportunities. But it doesn't work like that. I did that one. I tested that one out when I first started trading, and it doesn't work. It works sometimes, and I'm all happy with it. And then when it goes sideways, I don't know what the hell to do. And then I'm buying and selling and doing all kinds of things, and I'm giving back all the profits. That's not the way to do it. Trading isn't that easy. If it was that easy, everybody would be making money in it. And you know this because I say this all the time. Richard Wyckoff says it. Everybody says it. Trading, this business, attracts the smartest people around the world. Not all the smartest, but some of the smartest people around the world. They study this. They learn this. You're up against them, or you trade with them. You make a choice. You either trade off of candlestick patterns and little indicators, or moving average touches, and you trade against the smart money and you lose your money to them, or you trade like a smart money trader and you put in the same amount of effort and time to study it. Those are your choices. And I can't stand that people, when they get into this business, don't know where to go for this kind of guidance and direction and insight. There's nobody here to tell you where to begin. That's kind of a sad fact, but it happened to me. It happened to you, I'm sure. It happens to almost all of us. Nowadays, people just go to YouTube and Facebook, and then you get these guys. I'll stop right there. That's enough of my rant. So anyway, there's our opportunity right here. This is what we look for. This is redistribution. This is redistribution. We've got lots of videos on reaccumulation and accumulation and distribution. This is redistribution. These are the classic clues of redistribution. On the way back up, you've seen it in the videos. On the way back up, we're looking at these pullbacks, and we're putting these I'm putting these little shaded boxes on these moves all the way up, and you can see it like a stair step. And then we wait for a little spring. There's going to be one that's kind of like unusually low. It dips down and then bam, it reverses. But it's in an uptrend. It's in an up direction. And then that's our clue. That's the spring. And then we trade it. We wait for it. Give us our signal. We watch volume, and then we trade it to the upside. And then it's reaccumulation. We can see it. And this is redistribution. Same thing. We didn't get that really weird little spike to the upside, but did we here on the 5-minute? We're going to go in the 5-minute. We'll look for it. But the 5-minute still gives us our rollover and our setup. So let's go to the 5-minute chart now. Here we go. So you can see again here, let me get the crosshairs, tighten it up. So you can see where we were. Here's our dotted line. Here's our support level. Here is a pretty dramatic move to the downside. It goes from 30.50 to 30.25. 25-point move. It looks pretty dramatic here on the 5-minute, right? But 25-point move. If you didn't get it, that's fine. No reason to worry about it. We want something that's consistently, that's going to move consistent. We want to get our timing down right. The way to get our timing down right is, if we're going to drill down to a 5-minute chart, we leave something like this alone, wait for the pullback. We know there's going to be a pullback because if we go to the 1-hour chart, we're watching the same behavior. This is it. This is it right here. We wait for a close. We know where it's going. We wait for a pullback and a test to confirm that it's not going to go any lower and that that's not the low that's testing this monthly low. We wait for the pullback and the test. The tests are really important. We have to wait for the pullback and the test. Play that back 10 times. Here it is. Here's the pullback and the test and the test and the test and the test. And there is the spike, which is similar to, but just in the opposite direction, to a spring where we get a little spring. And then, so remember on the way up, if this was an uptrend, we would have our low, a pullback, a low, a pullback, a low, and then I'd be shading it with these little boxes on the way up. And then all of a sudden you'd get one that would take out the previous low and it would be the spring and then it would reverse. Well, this is the same thing. We get a high, a pullback. Here's our high, a pullback, a high, stays within this shaded area. Here's a third pullback, stays within that shaded area. And then here's our reverse spring. What is it? An upthrust. Here it is. And then it reverses. That's the one we want. That's the one we're waiting for. This one is more important than this one. It hit 1, 2, 3 times, 4 times, and then reversed. We're tracking this with volume on the 5-minute bar chart. Same time frame that we're looking for the setup. Here's my bullish engulfing candle if you need one, but I don't trade off of that, but I still look at it because I know you guys are. Sometimes I'll use it on my charts when I'm scanning to highlight certain things, and then I switch to a bar chart, and then I start doing my analysis. I start looking for the ultra high range bars. I start looking for, on my Thinkorswim platform, which we'll go to in a moment, the bars that have an ultra high range volume bar, things like that. So here's our reversal. Here's another pullback. Here's our entry. Here's another test, a pullback. Here's another test and a pullback. There's your bar again. You can trade it all the way down into and through, trailing it through that support low. Let's go ahead and tighten this up. I'm trying to tighten it. There it is. I'm trying to tighten it up to the point where we can get that monthly shaded support level into view. And you can see right here. Let me see if I can open it up one more time. Well, it's right here over here to the left, right where my cursor is. My cursor is right in the middle of that shaded box. But notice how these bars are closing down towards the lows, and we can trail this all the way down. But here's our entry. Here's our entry point. When it breaks below that support, comes back up and tests, and it tests it within the 5-minute. It was just a test on the 1 hour. But you can see the multiple tests here on the 5-minute, and then here's our sell opportunity. From 1.3040 or 39, and then the middle of that support is right here at 1.3004. So there's about a 40 pip move. But again, if we're hands-on and we're trading this, we're paying attention to where these bars are closing. We're letting the market tell us where to close out and get out of the trade, or psychological levels. Well, we know that the 00 is going to be a level that we're trading it to, and that's the 00 right here. And then this one pulls back just a little bit, goes up to 5. We're still holding. It pulls back down, and we see it take out the 00, and then it closes at the lows, so we can hold for another one. It pulls back only to 96, and then it closes at the lows, so we can hold for another one. And here's where we get the reversal. This bar right here reverses and closes above the last 4 or 5 bars. Sorry, 3 bars. Including this one is the 4th bar, right? It closes at the highs. So here's where we would make the decision to get out of the trade. All the way down here at 93 with an entry of 39 or 40. That's a hell of a trade. That's how you trade it. That's how you pay attention to the clues and the signals and the signs that the market's telling you. You're reading the market. This is modern day tape reading. Let's go to my Thinkorswim platform and we'll take a look at all of this with the volume chart. Okay, here is the, this is a British pound futures volume. So again, always, it doesn't matter what time frame. This is a 15-minute chart. I'll go to the 5-minute and the 1 hour in a minute. But always, it doesn't matter what time frame you're looking at. You want to go and find your ultra high range bars in the charts, identify them. In this one here, we can leave it alone. This is that 1 hour. I call it a high wave bar. Well, for obvious reasons, I'll go to the 1 hour chart and you'll see it. And I'll switch to a candlestick. And that is the small body right here with the long wicks on the top and the bottom. So again, it kind of outlines that range right here that we see, that low and then that bounce that created this overall consolidation range. So this is the 1 hour chart. So not only did it create like that ultra high range bar, but it also has higher volume. And then we can go back over here. So not only are we highlighting and practice your candle reading exercises. I'm sorry, your bar chart reading exercises. I'm looking at a candlestick right now because I want you to see what I call the high wave candle. But I can see it right away, knowing where the open and the close is, that it's going to be something that looks like a high wave. Small body, again, long wicks on the top and the bottom. But I prefer, and you should too, the bar charts. Eventually you'll switch over. Again, I use the candlesticks just to draw my attention to certain things when I'm scanning through my charts. And then I switch to a bar chart and then I start analyzing all the data. Practice your bar chart reading exercises. Print off those, the worksheets, and then practice. Again, what is this bar and what are the other bars and the background? What is it telling you that's likely to happen on the next bar before it happens? Practice that skill. It's a lost art. You know, all the old time traders did it. A lot of the good traders today take the time to do it and master it. It is what's going to make you 10 times, 100 times better trader. If you're failing, if you're struggling, if you're not reading the charts right, it's because of these things that you're not drilling on, the basics, right? A professional comes back in throughout their entire career and they keep working on the basics, on the fundamentals over and over throughout their entire career. That's what we're doing here. It's the same thing. So let's go to let's walk through that breakdown on the 5-minute. And then we'll walk through the bounce here and are we in a trade? Because I know that's where it's going to go next. So here is that support level, right? Let's go back over here to the 1 hour chart and find that monthly. It's just out of view. I'm going to have to add some more time to it. So here's that monthly low. Here's last month's low right here. This is what we're looking for. And there's that blast right through it. That's exactly what we would expect. Remember, we already talked about how we were able to gauge the way it was slowing down, and it, you know, stop thinking about after a while buying and buying and buying when it's not going anywhere. What is it doing? Where are we? We're in a downtrend. So where's the support level? Here it is. Path of least resistance. I mean, these are the things that should be going through your mind, but it's going to take some practice. And then I already showed you how to find that, the shortening of these moves and the up thrusts and all of that. So I'm not going to review it again. So let's go to the 5-minute. Yeah, I'm pretty worked up. Somebody just told me I'm worked up. I sound really worked up. I can't stand these videos on YouTube. I'm just sick of it. I'm sick of these guys coming out with these coaching programs saying what a fantastic coaching program it is. And all they're going to do is tell you some of these little tricks with the moving average. Yeah, I have the moving average in here. That's the 20-day moving average. But again, it's not the basis for my trade opportunity. I look for the springs and the up thrusts, but this is just to draw my attention, and I use it as a gauge. It's like a gauge. It's kind of like a windsock, you know what I mean, at the airport. If you're flying, that's not what you fly off of just because the wind. There's all these other things that you need to know how to fly. I'm, using probably a silly example here, but you get my point. It's just one of the tools that we use. So again, here is that rollover in the testing right here. This is what we saw on the way down. So again, you can see more volume coming back in on these moves to the downside. The moves and the pullbacks here back up are starting to shorten. You can see where these Let's go ahead and open it up. You can see where these bars are closing. We pay attention to where these bars are closing. Here is a bullish engulfing bar. No reason to buy that. We're in the opposite direction of the trend. This whole thing is breaking down. We can see that on the larger time frame and what we're looking at anyway on the 5-minute with the upthrusts and everything that was shortening before it even rolled over here. All of that was there prior to this. So there's no reason for you, if you know how to do that and you're drawing your lines to draw it to your attention, everything that you just saw me do a moment ago on the other chart with the white background, then you wouldn't be looking for a buy. You'd be paying attention, but then you'd look for the test and you'd see if it's going to take it out or if it's going to bounce. You know, is it strong? Well, here's a 20-day moving average. Again, a gauge. It's just a gauge. It's just a gauge, right? It's not what I use. This is what these fools do on these videos. As long as it looks right to them and they can cherry pick these little opportunities, they'll tell you, look how easy this trading system is. When it moves back up and touches the moving average, just sell it, just sell it, just sell it. Don't do that. It'll work sometimes, but then you're going to give back all of your profits. You're going to blow up you're likely to blow up your trading account. Don't do it. I tried it. I tested these methods out. I'm sure you have too. Anyway, I should just get rid of it at this point. I usually do before I even make some of my videos because I don't want anybody looking at it and seeing it and thinking if I don't discuss it and specifically talk about the fact that it's not the basis for the entry itself. It's just a gauge. It's my windsock, right? It's telling me which direction it's going in. That's what we should refer to it as. A pullback right here and then more follow through to when we are moving to the downside in the direction of the trend. And we can tell that because of where the bars are closing. They're closing at the lows. This is follow through. There's signals to be picked up here when you read these bars. That's why I keep saying study and practice your bar chart reading exercises. Print off those worksheets. Keep them either taped up on your office wall or on your computer desk and keep looking for them and keep practicing them. And then, of course, the other thing I recommend is just, again, go to a white blank or a white background chart. Blank meaning that you haven't drawn anything on it. This is the dollar Canadian. You can take a quick look at how I have this one marked up. But let's just say we're going to go to a bar chart. This is something that you should do at all times. Delete everything. And print it out and mark it up. Start marking it up. Just get a ruler and start doing everything that we walk through. If we're looking at a downtrend, well, let me tighten this up. If we're looking at a downtrend and we're trying to find the lows, we've got a selling climax, automatic reaction. This is pretty interesting, right? I mean, if we saw multiple, let me get this crosshairs. If we saw multiple lows like this, and you're trying to find the spring, that looks like a spring right there, and then it does it again. So if we see something like that, well, then we go to a 4-hour chart. Sorry about that. That's not what I wanted. And we go up a time frame higher, and we can start seeing it looks a little bit different. This looks like the spring, and there's the test, and then here is a possible breakout right up here. So that's something else that you want to practice. We talk about it in another module, but you want to gauge, and it's relatively easy to do. I mean, this is something I bring up all the time, even in the chat room. You want to try and determine on certain days what time frame the market seems to be reacting to in a better way. And one of the ways that I can figure that out, it's relatively easy to do with some practice. We just started off looking at the 1-hour chart here. And it got a little bit confusing, right? When you start marking up your chart, you see too many different things. So when you see too many different things or the same thing over and over again, go up a time frame. And then it starts to, when you start working on this area right here, you know, this is a 4-hour chart now. We can even go to a daily. Well, now we've got our low here. And this starts to look like our spring. And here is our resistance. We've got one right here. Or is that the low? Here's the low, right? Here's your selling climax. And that low right there, all of these bars right here close right at that support low. It's just a spike, so that may not be the spring. And then here's a test. This is the kind of spring we're looking for. We see these bars start to close below that support, then make an attempt to go even lower. Well, that's a test of that low right there, that spike low. This is just one of those one-off dramatic moves. This isn't common. This isn't typical, but this is what we're looking for. This is the sign of that spring. This right here. Notice where the bars are closing, outside and below that support. We're going to open this up here in a minute. This is another lesson, of course, and these are not. So this is just kind of one of those attempts to break through that support. There's a test. Here's our spring. So now we've got our low, our automatic reaction high. And we don't know that until we start piecing things together. We got to get in there and look. That's why we don't want to rely just on candlestick patterns to tell us what to do. That's going to get you in trouble. It gets me in trouble all the time. It gets everybody in trouble. I mean, sometimes it works out okay, but sorry about that. Now it starts to look different. Now we got a different story here. So now, next week, it's Friday. We're not going to get into a trade here, but notice where these bars are closing. So now, nothing really closes with any great significance. Moving up, pulling back, testing, and then bouncing. This is C, this is D, but we want more follow through. If we don't get it, then it's perhaps maybe a pullback, and maybe it's going to come back down and approach the lows and make newer lows. Let's go ahead and open this up and see what we see here. So let's use this shaded box. Notice where all these closes are. This, now you start highlighting things, because when you come back to this, you're going to notice all these bars are closing right there. They're not going anywhere. This is just indecision. There's no reason to go long. There's no reason to go short yet. Let's tighten this up. Let's go to the daily. If it comes back down, well, it could make a break of support. Maybe this isn't accumulation. That's what we're looking at. The possibility of, is this accumulation down here at the lows and it's going to bounce and come back up? Or is this just redistribution and a deeper pullback? Let's go to the 4-hour again and tighten it up. And is it just kind of sitting right here, right around this area of resistance? Notice this area right here. This is the 4-hour chart. A lot of activity in here. And here we are sitting right around that range. So that's something to consider at this point. We want to follow this out. This is the dollar Canadian 4-hour chart. We want to follow this out next week and the week after to see exactly where it's going. Practice, practice, practice. It does make you perfect. Practice.